Hello and welcome everyone. This is John from PA Stock Alerts. First off, I wanted to say our apologies. Yes, today Tom and I were very diligent in looking at our position in FCX and taking 10% gains on half of the position. Unfortunately, our email server had an issue. I guess today there were some email issues or server issues and different quote vendors and all kinds of little internet problems that just so happened. We tried to resolve the problem as quickly and on different venues as possible, from one system, from PA Stock Alerts, from National Futures. We tried getting it from 3 different separate entities. Finally, I just sent it out to everyone on the list via my Outlook Express for our current subscribers. So if you are someone who is visiting us and you didn't get an email, our apologies. Or if you got multiple, if the emails finally came through, as some people complained, they got multiple emails with different price levels. Well, the reason is that the first email we sent out was based on where the market was in pre-session. But then when we didn't get the email and the test email didn't come back to us, what do? We sent another email with the new price because the market had traded off its highs. And then when that email didn't come through, we did it a third time, and that's the one you probably got through me at National Futures through my Outlook Express. So I just wanted to give you a reasonable explanation why you got maybe 2 or 3 different emails with 2 or 3 different prices. The bottom line is you should have gotten out of the market at a reasonable price, anywhere between 22 at the very least up to 44 area in the FCX half position. We have our stops moved up to break even. And we'll get into that in just a second. Let's talk about the overall market. We have pivot resistance here at 131.49. That's the monthly pivot resistance. Now, here is in red, this is the advanced decline for the New York Stock Exchange. It's peaked its head, as you can see. It's just broke out of this blue line. That blue line is the level of where we were when prices were at their high in July. So that's the level. Where was the number of stocks that were going up versus the number of stocks going down, and on what kind of volume? That's the blue line here. This is the on balance volume. The only thing is that we have a little bit of divergence. This price is just gingerly rising. It's going up slowly, and it's on very low or light volume. And on this on balance volume indicator shows that clearly we haven't seen an acceleration in price met with an acceleration in volume. That's kind of a good thing, actually, in certain time frames, because the reason it can be good is real simple. If the market rallies too hard, too far, too fast, and it's on aggressive volume, that might give us an indication that perhaps we've expunged the buying. In other words, we've exhausted ourselves. But the market internals showing us that more stocks are going up than going down, and it's on a very ginger approach. We're not seeing excessive moves and then see the market showing us perhaps like this, a 2-day rally with ensuing volume that I'm showing right here. And then what had happened? That was actually a capitulation or exhaustion phase. That's all that happened there. The market topped out. So it's not demonstrating that the market's peaked out yet. Perhaps we're going to test that monthly resistance, and we'll see where our positions are at that point in time. So with that said, let's take a look at our positions. All right, AVD had a nice little breakout today. Further gains, closed above yesterday's high, very positive. It did the same thing in the overall market. We closed above yesterday's high, so that's a positive thing. And as we are nearing the S&P monthly resistance, we are nearing AVD monthly resistance. So we'll be taking a look because we're only in a half position here. We bailed out of half of this position, a little bit lower back here around the 14.18. So not bad to let this thing ride a little bit. Next, on CHK, unfortunately, we were stopped out of CHK. Natural gas continued to plunge. Today, we were stopped out of natural gas energy play, which we'll revisit. But as you can see, even looking at the on-balance volume, this little decline here really was on substantial volume. So we probably will revisit that. I don't know if we'll get down to 1932, but we definitely will look at this, and we assume that we will see some momentum follow through to the downside on CHK, as well as other companies in that space, as natural gas is just plunging to newer lows every day. It's near an area where I thought we would support around 280 basis the front month futures contract. Natural gas today was under 270, so we're seeing quite a bit of market reversal there in the energy natural gas plays. All right, next, our last and not least is the slight, I guess you could say, tech sector, entertainment sector, call it what you will. Yahoo. Yahoo today didn't do much of anything. However, we did have a nice positive close. And in fact, let me zoom this up because you'll see something else that occurred today, which was, I guess if you're looking for positives, we closed above yesterday's high. So that was a very nice thing. Long shadows here indicate there is some buying against this breakout midpoint green candle right in here. So this area has been a support. We've got our stop down below the market. We're in half a position. We did get out at a much better price above the market, but we're letting the market dictate our trade. If it's going to continue to go up, we're going to trail our stop. If the market's going to go down, it's going to stop us out, and it'll stop us out with a profit. So there you have it. That's what our decision is with Yahoo. We're not adding any new stocks at this point in time. Main reason, we're coming close to a monthly pivot resistance, number one. Number two, next week's a 3-day holiday with Martin Luther King Day. Number three, we're coming into earnings season. Most importantly, we're coming into option expiration on the 20th of January. That's next Friday. And all in all, we typically see a profit-taking break in the marketplace between now and next week. So we want to be aware that, last year we had a significant decline. The January pullback was very significant. This year we're starting to use this rally to unload or lighten our long positions. We're not short yet because the market hasn't dictated to take action to get short. So we just don't have that type of price action. But I think it's prudent and makes sense not to add on to longs, but to use this strength to take profits. And that's our standpoint. So I hope you found this information valuable. Thank you all very much, and nice trade in FCX, and thank you for bearing with us through the troubles that we had with the email alerts. But I think we solved the issue, and everyone should have gotten alerted that we're in those positions. Thank you all very much.